I'll be talking about break even. So the understanding of break even in trading. The short form for break even is BE. So for those who have been trading, they will have been hearing the word BE. BE means break even. Now, what is break even? Break even in Forex is the point where your trade neither makes a profit nor incur a loss. It occurs when the price have moved enough to cover your entry costs, which include the spread, the commission, the swap, as the case may be, from the broker. So essentially, at break even, your trading account remains unaffected by the outcome of the trade. That's why it is called break even. So how do you set the break even? You have to calculate the spread, the commission, and any other additional fee that your broker has tied to your trade. And once that has been cleared out, that your trade is now in profit, then you adjust your stop loss. You move your stop loss to your entry to protect your entire capital. And what's the advantage of using break even? You are able to trade at zero risk. It's a risk-free trade because once you set your BE, the risk of losing your initial investment in trading is removed. That means the moment you can successfully set a BE in trading, the worst that could happen is that the trade will close in a zero. That means your capital will not be affected. And also, break even gives you psychological relief. It allows traders manage their emotions and then focus on maximizing profit. The moment you set your break even, you know that this very trade cannot end in loss. This very trade cannot end in loss. So that is what the break even is. Now, if you look at what we have on the screen, just take a look at what we have on the screen. You will see there are two graphs. There are two pictures there on the screen. And one is the initial trade, and then the second one is the trade that already has the BE. Now, the moment you set your trade, the moment you place your trade, you put your stop loss, you put your take profit, and then the trade starts running. Two things would happen. Either the trade goes immediately against you to hit your stop loss, or the trade begins to go in your favor. Then another possibility that can happen is that the trade can start going in profit without getting to your take profit target. And then the trade starts reversing and it could reverse back to your stop loss because you can't actually stop the market. The market is just there doing its own thing while you are there controlling your trade. So now, how do you use break even and how does break even takes its effect? When you place a trade and the trade starts working fine, as predicted. You will start seeing profits. Now, when you open a trade, take note of this. When you open a trade, the trade starts from minus because of the spread, the asking price, the difference between the asking price and the bid price. Now, the moment that level has been overcome, and then your trade starts moving as predicted in your direction, 5 pips, 10 pips, 20 pips, 30 pips, you start seeing some profit. The next thing that comes to your mind is that I want to protect my capital. The trade is doing fine. So this is when break-even comes in. Now, break-even is actually moving your stop loss from where it is to your entry. Look at the second diagram. The first diagram is your trade, your entry, and then your stop loss, and then your profit. And the trade is already moving towards your profit. So you now move, when you move your stop loss to the entry, above the entry, you have actually set a break even. So peradventure, the trade begins to reverse. The worst thing that would happen is that it will close the trade at almost zero or little profit. That is break even. So how do you set your break even successfully or in a very good way that could still give you good profits? Ensure that before you set your break even, that the trade has moved 50% or 60% into profit. That means halfway to your profit target. If not, if you set the break even too early, the price might actually fluctuate to take it off, and then it goes in your direction. So ensure that the price actually move halfway into the set target, the profit target, before you set your break even. Another thing you can also look out for is look out for a retracement or a retest of your entry, a swing into your entry, and then price is already going backward. Let me make that clear. When you place your trade and then the trade starts going in your direction, one of the things that would happen is that before the price gets to your target, it will do a reversal. A little bit of the price will move backward. Let's say it has moved 10 pips, and then it will do a little pullback, moving back to 5 pips. Then continue again back to 10 pips, then to 15 pips. It moves down again back to 10 pips, then continue again to 15 pips, then 20 pips. So ensure that there have been a retracement, a pullback, a retest towards your entry, and then price is already moving far away from the entry and half into your profit target before you place your break even. In that way, you'll be having a very good trade. Let me show you a practical example of what I mean. Let me make it more clear to you so you can understand what I am talking about very clearly. Now, look at the chart. Now look at, let's say this is the price. Now watch this. Let's say this is your entry. Then this is your stop loss. The moment you enter, the price pushed up. Now, you are supposed to move this your stop loss to your entry above, a little bit above your entry, somewhere here. A little bit above your entry. Let's say somewhere here. Yes, somewhere here. That is where your break even will be. Now, before you set that break even, this is where the stop loss is. Allow the price to go up and then come down, and then it's going back up before you now move your stop loss above your entry. By this, you will be setting a perfect break even. And then your mind is off this trade. Then you watch the trade going towards your profit targets. But the main essence of break even is to secure your profits and to be trading at zero risk. To be trading at zero risk. That is just the essence of break even. If you have any question, you can drop it in our community, and then it will be attended to.